Do you want to know how to make the most of your money and use it effectively, whether you earn $100,000 or $50,000 a year? In this video, I'll explain in 3 simple steps how you can take control of your finances and optimize them. Let's get started. First of all, you need to understand what income and expense sources exist. You need to be clear about where your money is coming from and in which areas you are spending it, whether out of necessity or voluntarily. Let's start with the income sources. A distinction is made between active and passive income sources. Here, we will first focus on active sources. For these, the basic principle is that you exchange your available time for money. First and foremost, the classic example to mention here is earning a salary from dependent employment or a regular job. Secondly, income from self-employment, such as working as a freelancer or an entrepreneur. Thirdly, earning commissions, for example, from working as a broker. And finally, income from a part-time job or a side hustle, such as working as a delivery driver. Now let's move on to passive income sources. These can be characterized by the fact that you have to put in little to no effort to earn money. First to mention here is rental income from residential properties that you own. Secondly, dividends from stocks or interest income from bonds. Thirdly, royalties from books or patents. Finally, income from affiliate programs or the sale of digital products, such as ebooks. On the other hand, there are our expenses. These can be divided into necessary and voluntary. We will start with the necessary ones. First, housing expenses should be mentioned here, such as paying rent or a mortgage, along with ongoing utility costs. Second, mobility costs, such as maintaining a car or purchasing a public transport ticket. Third, costs for groceries and daily household necessities. Finally, costs for insurance, personal health, or internet and communication, such as using a mobile phone. The items listed here are the most important ones for now. I will go into more detail in a later step. Now, let's take a look at voluntary expenses. Voluntary expenses primarily include dining and leisure, such as eating out at a restaurant or attending a social event like a party. Secondly, entertainment and shopping should be mentioned, such as pursuing a hobby, subscribing to certain streaming services, or going to the cinema. Thirdly, travel and wellness, such as going on a weekend trip or taking a long-distance vacation for relaxation. Finally, personal development, investing in yourself to grow, such as taking online courses or workshops. Now that we have explored the most important sources of income and expenses, it's time to create a well-structured financial overview. I will explain the best way to do this in the next step. To create a financial overview, you first need to examine which of the previously described income and expense sources apply specifically to your situation. It can be helpful to review account transactions from the past few months or the previous year. Then enter all collected data into a digital budget planner. I will show you an example now. I have linked the budget planner you see here in the description of my video. If you follow the link, this interface will open up. Initially, you will only have what are called view-only rights. However, you can easily change this by doing the following. Click on File at the top and then select the Download option. Here, you can download the file, for example, as a Microsoft Excel file. Save the file to any location on your computer. Once you open it, you can customize the entire interface to suit your preferences. As I mentioned earlier, I'd like to go into more detail about the expenses. This budget planner offers excellent depth for this purpose. If you scroll down a bit, you'll see that the relevant main categories are broken down in great detail. Check which expense categories apply to you and then adjust the planner to fit your own situation. I've already done this and would now like to show you my example, guiding you step by step through each category for a first orientation. We are now in the customized monthly budget planner. On the left side, income is divided into active and passive sources. The columns are categorized into expected values, actual values, and the difference between them. On the right side, expenses are listed, categorized into necessary expenses, voluntary expenses for leisure, and voluntary expenses for personal development. Here too, the columns are divided into expected values, actual values, and the difference. All values are summarized in this section, allowing you to easily compare the expected and actual amounts for both income and expenses at a glance. Let me walk you through the individual rows. In this example, we assume a full-time job that provides a monthly net income of $2,500. All values listed in the income section are after taxes and deductions, meaning net amounts. Additionally, we have a part-time job that brought in $250 net this month. Furthermore, we own a property that generates $500 in monthly rental income. Our stock investments yield $50 in dividends, and we earn $50 from selling digital products, such as an ebook. Altogether, this adds up to an actual income of $3,350 for the month. On the expense side, we begin with necessary expenses. The percentage values I've entered here are also relevant. These are based on the so-called 50-30-20 rule, a maximum of 50% of your income for necessary expenses, 30% for voluntary leisure expenses, and 20% for personal development. These percentages serve as guidelines to help you better assess and manage your spendings. Necessary expenses include housing costs, such as the net base rent, and ongoing expenses like gas, water, or electricity. Another important item is the emergency fund, which should be regularly saved, for example, in a savings account, to cover unexpected events like repairs or replacement purchases. Next is the transportation category, which includes a monthly public transportation pass or maintenance and insurance costs for a personal vehicle. The next category includes household and clothing expenses, such as groceries, clothing purchases, and, if applicable, costs for a pet. Health, insurance, and internet covers liability and accident insurance. Health insurance is not included in this example, as it is paid directly through payroll in conjunction with the employer. Additionally, there are costs for a gym membership, a DSL connection, and a mobile phone contract. These necessary expenses total $1,920 in this example, which represents approximately 57% of a total income of $3,350. This slightly exceeds the guideline threshold, indicating that there might be room for optimization. Leisure expenses include dining out, going out, or meeting with friends. These social activities should have a fixed monthly budget to allow for regular outings. This category also includes entertainment and shopping, such as hobby-related expenses, subscriptions to streaming services, or movie theater visits. Under travel and wellness, savings for weekend trips or longer vacations are accounted. Therefore, all expenses of this voluntary section for leisure total $820, which is approximately 25% and therefore below the guideline threshold, which can generally be considered positive. The final category concerns personal development. This includes investments in online courses, workshops, or further education, as well as savings for investments such as stocks, ETFs, or other income-generating assets. These expenses amount to $550, which is approximately 16.5% and also below the guideline threshold. Overall, this example shows that $60 would remain as disposable income at the end of the month. A quick note about the difference column. In the income section, a number without parentheses indicates a positive variance, more income than expected, while a number in parentheses indicates a negative variance. In the expenses section, it is the opposite. A number in parentheses represents a positive variance, lower expenses than planned, while a number without parentheses signals a negative variance, higher expenses than expected. With this planner, you can create a monthly budget, compare planned values with actual ones, and keep track of your expenses. You should establish a routine for updating these values regularly. This way, you can identify areas where you're managing well and where there is room for improvement. Certain expense categories are particularly well suited for regular optimization. Consistently improving these areas can have a significant impact on your wealth over the long term. I will now cover this in the final step of this video. Question and regularly optimize your expenses. There are 4 key areas you should focus on initially. Let's examine these more closely, and in this context, I'd like to provide you with some tips on how to manage these areas in a cost-effective way. Let's start with cars. For many of us, a car is indispensable and a very useful means of transportation. However, it's often the case that people spend far too much money on their cars. Always try to pay for a car in cash rather than financing it. Opt for a good used car instead of a new one, and research maintenance costs online beforehand. Choose a car that is affordable to maintain. You can always buy an expensive sports car later, once you've built up sufficient assets. Let's move on to internet and mobile phone. Does it really have to be the latest iPhone every year? Opt for a device from the previous generation instead. You can also confidently choose refurbished devices. Make sure your mobile plan isn't too expensive either. Many people pay $80 to $100 per month for their mobile contracts, which is simply absurd. Choose an affordable plan that covers all the services you need. Such plans are available for as little as $10 per month. Similarly, with your DSL connection, it's worth checking regularly, especially just before the minimum contract period ends, whether there's a cheaper provider available. Regularly review your electricity and gas providers as well. In many cases, you can save several $100s per year by switching providers. Regularly switching providers is therefore well worth it. You can easily arrange these switches through a comparison portal on the internet. With just a few clicks, you can quickly find a new provider and secure a more affordable contract. Finally, you should also review your insurance policies. First, ensure you have all the essential types of insurance, such as health insurance, liability insurance, accident insurance, and disability insurance, as well as legal protection and household insurance if necessary. However, it's also common for people to have too many insurance policies and pay far too much for them over the years. Therefore, evaluate which insurance you truly need for your situation, and then regularly check whether there are providers offering the same coverage at better rates. You should also set reminders in your smartphone calendar to ensure you don't miss any cancellation deadlines. Additionally, you can use Cashback Portals for many of the points mentioned. These portals pay you a certain amount when, for example, you sign a new electricity contract. This cashback is on top of the savings you get from the new contract. I've linked 2 example cashback portals in the description of this video. Now, let me ask you, what would you do with the money saved from these optimizations? I have one final suggestion for you. To illustrate it, let's briefly return to the planner. Back in the budget planner, I want to propose a way to use the money you freed up by optimizing your income and expenses. My suggestion is to divide this money into 2 areas, allocate 2/3 to your investment rate and 1/3 to your voluntary spendings. This approach ensures that you can live well in the present, enjoying activities like regular meetups with friends or other leisure pursuits, while also preparing for the future and building wealth. The idea behind regularly increasing your investment rate is to grow your passive income step by step. You can achieve this by investing in dividend-paying stocks or residential properties that generate rental income. The first goal is to increase your passive income to the point where it fully covers your necessary expenses. From there, you can continue working to increase your passive income until it covers all expenses listed in your budget planner. This process will lead you to financial independence over time, freeing you from reliance on external income sources like a state pension. We've reached the end of this video. I hope you can apply many of the topics discussed to your budget planning and regularly optimize both your income and expenses going forward. Always keep the following golden rule in mind: buy assets that generate cash flow, and then use that cash flow to purchase additional assets that generate even more cash flow. Repeat this process over and over again. If you enjoyed this video, please give it a like, feel free to share it with others, and don't forget to subscribe to my channel. In the top left corner, you can find my video on multi-bagger stocks. Feel free to check it out to grow your wealth. See you in the next one.